Hey folks, welcome to another market update from Charting Star. I'm Joe. It's Sunday the 18th of December. I got 10 charts for you, 8 about the DAX, 1 from the Dow Jones and 1 from the S&P 500. And I would like to start off with one chart. I was showing that symmetrical triangle like 4 weeks ago. And as you can see, it hit that 100% target. Almost perfectly. The target was at 14,667 and the final top was at 14,677. I also have to give credit to my friend Gerd from Belgium. He had again level at I think it was 677. I think the cash market, the high was 2 points below that, but he hit it on the nose perfectly. So many thanks to Gerd. That was a perfect call. So we went short there, and on Friday I was posting that I was taking all my profits out at 13,848, and I was tradering straight after that, even before these levels were reached. It's worth to go for a long trial at 13,790 to 822, and right in between it turned around. I also gave you some short-term profits at 892, which got hit as well, and the longer-term profit targets are at 14,200. Here's another tweet from the 12th of December. I gave you that symmetrical triangle, and I also mentioned they like to fake to the upside, then to the downside before they fire off to reach these upside targets. And this is what happened. So I predicted that pretty well. It reconfirmed that upper trend line before it fired straight through that green target box to hit our 677 up here, where we had that other target. And I gave you also another nice entry for the Dow Jones on Friday evening at 32,655. I think the low was at 648 with the first short-term target at 32,820. That was a very nice looking ending diagonal, a Wilbur wave wedge. And once we hop into my charts, you see what happened. It hit that first short-term target, and I don't think that whole thing is finished. We're gonna zoom out into my 1 hour time frame, and this is what I see right now, or what I consider. Having a look at the Dow Jones, I consider that move after that CPI they sold off as wave 1. Then there was a nice ABC as wave 2, and then I think we finished wave 3 down here as an 1, 2, 3, 4, and wave 5 ended up in a, as I mentioned many times now before, in a ending diagonal. What we can actually do here as well, and usually it gets wedgy once wave 5 is about to start, and this is actually what's happening. So you have like another wedge down here, and we can take this target line here. So this would be like the longer term target here around above 33,000, 3350 for the Dow Jones. So I see wave 3 completed right here in that green box. I also gave you that on Friday evening. I think there should be a rebound as wave 4 back into that 33 250, 500 area before there's a last wave to the downside. That would make the most sense to me right now. We have the same in the S&P 500. So this is a 30-minute time frame based on the cash market. So I consider this one here as wave 1, wave 2, and wave 3 subdivided into 5 waves. 1, 2, 3, 4, 5. That is a very clean count. And now wave 4 should start. And usually they run between the 38 and 50% retracement of wave 3, which is somewhere between 3914 all the way up to 3940. and then there should be a wave 5 coming up. It should break these lows, and I think somewhere in here there should be the end of it. Usually it's a duplication of wave 1, and once we run here, let's say into that 730 area, or we don't even come that high, let's say 914, it should end up here somewhere at that 3800 level, or even a bit lower for the S&P 500. And then we have to look what's going to be next. If it's a impulsive wave 2, they like to close the gap of wave 3, which happened here. So if there's an impulsive wave 2 coming up, the ambitious target is actually here, that 390.95, or like, let's make it easy, the 4,000 area. If this turns out to be a 5-wave structure, and this one here is then the first wave to the downside. Oh, actually, I wanted to show you something else on the S&P 500. I switch over the same chart, switch over in a 2-hour time frame, and you see here that red bearish Wilbur wave wedge, which still has these target lines here, which run much lower. And you see that blue Wilbur wave wedge, which hit its target on Friday afternoon. So that worked out pretty well. I gave you that wedge somewhere here just before we hit that target here at 4,098, and the high was just slightly higher at 4,100. It came down, came up again with that CPI spike, and then hit that target line very nicely. And I also gave you on Thursday that a lot of people were waiting for that Batman warning actually triggered many of my indicators, and I got it out somewhere at the 40.86 area, I think it was. So just minutes after we hit that high, that Batman warning came out. So, and usually when I get it out, we get much lower levels. So let's see what's going to happen at the S&P later during this week. Let's continue with the DAX, and we going to start off with the weekly. It's just a little overview here of my count for the cycles. And we had a new primary cycle start here at the end of September with that low at 11,862. And we topped now out in a so-called half primary cycle in week 11. And usually there are several targets, and the minimum targets are already hit. We hit already the 50-week moving average, which is basically the same as a 45 moving average on the daily. So the minimum requirements are met, but I think we would run a little lower next week, and before there's a stronger bounce to the upside. This high now becomes quite important, because once we break through it, this whole cycle turns out to be bullish, and we could run even higher. If we stop here, and if we can't break through that level, it's a so-called left-hand translation. That's what I marked here. And then this whole cycle turns out to be bearish, and it actually could break that low in one cycle. I don't think it's going to be the case. But, and once I zoom out here a little bit more, you see a cycle low on the weekly is actually suggested in the first week of January. The tolerance is already starting next week for that. So keep that in mind. And once we have a look on the daily cycles, this blue one here actually suggests a low end of next week. And as you can see, the tolerance is starting already at the beginning of next week, or like, let's say the 20th, that's Tuesday. And for a half primary cycle, as I mentioned, that 45 moving average, that is this purple line. The second target might be the 200 moving average based on the daily, if it got broken from below in that cycle, and that's what happened. So this 200 moving average could act as support, and it's right in between the 38 38.2 retracement level of that move. And it's also a double Fibo level. It's also the 38.2 the other way around from the all-time high to that low. So we went coming from below, we came to the 38, we came to the 50, and we came to the 61.8, by the way, at 14,598. So this is actually quite strong support here between 13,554, because the 200-day moving average is there, the 38.2, and 13,601, there's another 38.2 retracement. So it's a double Fibo. And I also gave you, what's this? Oh, it's gone. I also gave you that cycle chart here. And it's a short-term cycle chart. It's based on a 4-hour time frame on the Cetera, and this actually worked out quite well. And as you can see, that cycle here, if we hit the low on Friday, which worked basically perfectly, there should be a rebound into that 14,163 area, which is also this breakout level here at 14,149 that could be retested before we actually run lower into that yellow zone to have a proper ABC correction. But we're going to have a look at that count now, because it looks actually a bit different than the American markets. So what's the difference to the US markets? I think they are somewhere here, and DAX is already the leader and completed wave 4 and finished off wave 5 already. So I count this one as wave 1. Then we had a flat correction as an ABC, AB with a lower low, and then we finish off as wave C as wave 2. And then we came down in the third wave as wave 3, and then we came up in a very tiny wave 4, and we finished off as wave 5. Yes, this can be also counted as a 1, 2, 3, 4, 5, and we run exactly the same as the US markets. We come up here as wave 4 somewhere in that 14,000 area, and we finish off wave 5 on Monday or Tuesday. However, I still prefer that we finished off here already, because DAX did this typical characteristics he usually does. He set up a higher low on Friday evening, and I said, what I mentioned on Twitter here, that is a second chance to buy, and if everything goes right, we are moving up in an A, a shallow B, and a C up to finish off either wave 2 or wave B, if this whole thing is going to be a correction of that whole rally we experienced since September. So watch that 14,000 area on Monday or Tuesday, and the next crucial area is 14,142, or let's make it easy, 14,150 to 250, and we have to watch that very carefully, what's going to happen here. If it comes down again in 5 legs, that could be a C, but it could be also a third wave to the downside, and that would be the 100% target for a C if we run all the way down up here at 13,413. And by the way, these targets for these 1, 2, 3, 4, 5, they got met with a 78.62. That's the minimum for this 5th leg. So just keep that in mind, that we might be done down there for the first impulse. And one more daily chart for you. I was twittering that also earlier, that we still have that descending broadening wedge with these open targets. The statistical target still waits there up 14,750, and the 100% target at 15,105. And we experienced already a 24% rally, which is quite a lot. And it's just weird that we just turned around just a few points underneath that statistical target, which is usually the minimum, which is 83% of this 2,085 points. Next week we see, here you see also that 45 daily moving average support. And this can be also counted as a 1, 2, 3, 4. And yeah, we need to wait what's going to happen next week. I think we run a bit lower into that area here where these retracements are, and then we probably run up here to hit these targets once again. And then there was a big discussion about my long-term view at the DAX. And this is a so-called expanding flat correction in my point of view. So I tried to keep it as simple as possible for you, because the expanding flat correction is the most complex of all. Talking about a flat, a correction as a flat usually occurs after an impulsive move we experienced here from the all-time high all the way down to that low in March we made. And having a regular flat, it moves usually in a range. And the structure is usually the same. It's a so-called 3-3-5 structure. So we have an A, B, C to the upside as leg A, then we have A, B, C as leg B, and then it usually finishes off with an A or 1, 2, 3, 4, 5. That is a flat. And usually it stays, as I mentioned, within that range. Then there's, for example, like a running flat, where this low needs to be necessarily higher than the starting point, and this finishing point shouldn't be higher than this one here. Now we have an expanding flat where exactly opposite actually occurs. So as the name is saying that already, that expanding means this low has to be taken out by this one here, and this high doesn't necessarily need to be taken out by that high, but this leg here should be duplicated by 100% as a minimum, or like it's usually between, let's say with an 80% probability, it's usually between 100 and 127% duplication of that leg. And it can run all the way up to the 161.8 to make that clear. And having now that first leg here to the downside, I separated. What you have to do is you have to separate that whole move now of 2022. And most people just say, oh, this is a starting point here, it's the all-time high, or here, and this was a low. So this is one move to the downside. Now I say that's completely wrong, because you have to see what actually took place around here. And today we can say we just move basically sideways in a very big range, or we call that an expanding flat because we took out that low over here. So what happened after that first leg here to the downside? We experienced a quite impulsive ABC to the upside as leg A, and then a very, very complex B run from March, end of March, all the way down to that low at the end of September. We had like zigzags in here as an A, B, C. There weren't really any zigzags in here, and then we ran up and again in an A, B, C, and then we came down again as an A, B, C to set off the lower low compared to this one here to finish off the whole leg B. And now we are in that final leg C to finish off that whole correction here. And as I mentioned, it usually occurs in the 5-leg structure. So we have this one here is clearly leg 1, 2. We had a very long third leg. And now the question is, did this thing finish off here already? So we have a 1, 2, 3, 4, 5, because this one here was actually higher than this one. Or is this one here the third leg? And we come down now on leg 4, and we are still about to finish leg 5 as leg C. And I put here these extensions, and because we met already the minimum requirements between the 100% of leg A, which is between 14,349 and 15,025, that's 80% probability that leg C finishes off right in between here, and we did that already. It doesn't mean we are done. It could run even higher to hit that 15,000. The max extension is a 161.8. And what usually also occurs with that final leg is a negative RSI divergence. And that actually took place over several weeks on the daily. And I mean, the divergence could extend even more, could turn out to be even flatter if we run higher and set up a new high. And we run here to hit that 70 area again, we still maintain that RSI divergence and we are still within all these requirements. And then overall, I consider this as the first leg, and this first leg needs a duplication to the downside. Either we are done here, we run all the way. This one here is now measured as a 100% move from that high we made last Thursday. So we would run into 10,829. But cycle-wise, there should be another push. And we could run a bit higher into January to finish off here somewhere at beginning or mid-January to get our final leg to the downside into March. That's about the flat correction at the DAX on the big picture. So yeah, that's about it. I hope you enjoyed this one here. I haven't done a video for quite a while, was running out of time. So yeah, I wish you a great weekend and I wish you all the best for next week. So my main bias, I think, got now very clear. And yeah, enjoy the rest of your weekend. I see you next week on Twitter. Bye bye.